Every year, thousands of freelancers make the exact same mistake. They land a client, they finally get paid, they see money hit their account, and instantly feel rich. So they celebrate. Maybe they order expensive food. Maybe they upgrade their setup. Maybe they buy something they've wanted for months, because in their head, they finally made it. But then, a few months later, tax season arrives, and suddenly, they realize something terrifying. They already spent money that was never actually theirs to spend. That's the hidden problem with freelancing. Nobody automatically removes taxes for you. When a normal employee gets paid, their taxes are usually deducted automatically. But freelancers, they receive the full amount up front, and psychologically, that tricks your brain into thinking all of it belongs to you. But it doesn't. Part of that payment already belongs to taxes. And if you ignore that reality for too long, April becomes painful. That's why smart freelancers use something called the tax bucket rule. And honestly, this one habit alone can completely change your financial life. The rule is simple. Every single time you get paid, you immediately move a percentage of that money into a completely separate account. Not later. Not after you spend a little first. Immediately. Because the longer money sits in your main account, the easier it becomes to spend emotionally. And emotional spending is what destroys freelancers financially. A good beginner percentage is around 20 to 30%. So let's say a client pays you $1,000. Most freelancers look at that number and think, I just made $1,000. But smart freelancers think differently. They understand that maybe only $700 to $800 is actually usable. So the second the payment arrives, they move $200 to $300 away instantly. Out of sight, out of mind. That money becomes untouchable. And this is where most people mess up. They think, I'll calculate taxes later. But later usually means after the money is already gone. That's why tax season feels like getting attacked. Not because freelancers don't make enough money, but because they accidentally spend fake income. And fake income is dangerous because it creates a lifestyle your real income can't support. Now here's the crazy part. The tax bucket rule doesn't just help with taxes. It actually changes your mindset completely because once you separate money properly, you start acting like a business owner instead of just someone receiving random payments. You become calmer, more organized, less stressed. You stop panicking every time expenses appear. And eventually, you stop living project to project. Now here's another powerful trick. Open a completely separate savings account. Only for taxes. Do not mix it with your personal spending account because humans naturally spend what they can see. If your main account always looks full, your brain automatically relaxes and starts justifying unnecessary purchases. That's why separate accounts matter so much. They create automatic discipline without relying on motivation. And honestly, financial systems beat motivation every single time. The freelancers who survive long-term aren't always the most talented. They're usually the ones who manage money properly, because making money and keeping money are completely different skills. One gets attention, the other builds freedom. So from now on, every single time you get paid, remember this. The money entering your account is not fully yours yet. Pay your future self first. Create the tax bucket. Protect yourself before the problem appears. And when April finally comes, instead of panic, you'll feel prepared.